You need to learn selling options. I'm telling you, it's way better than buying options. Once I learned how to sell options, my whole game changed. I became a consistently profitable trader because of the calm demeanor they allow you to do, the probabilities that are on your side, the ability to mix and match your trades and kind of tailor them to exactly what it is you want, and just the time decay. Time is on your side when selling options rather than against you when you're buying the options. 90% of the time, stocks want to do this particular thing. 90% of the time. So if you know that a stock wants to do something 90% of the time, and that's a statistic, shouldn't we take advantage of that? By the end of the video, you're going to have a complete understanding of what the heck I'm talking about. Let's get started right now. Okay, so what I'm looking at here today is Amgen, and basically it popped up on my scanner down here. I have a scanner set up that's looking for stocks that have found themselves out of the Bollinger Band. So the Bollinger Band is a blue line here. And when stocks reach out of the Bollinger Band, a lot of the times they want to come back in on the downside and the upside, right? Every single time it gets out of the Bollinger Band, statistically, 90% of the time, it wants to find itself back into the Bollinger Band. Now, with that stat, something that's 90% of the time, probability on my side, I'm trying to take advantage of that. So I look at stocks that have found themselves out beyond the Bollinger Band and sell calls up above the price so that when they eventually try to find their way back down into this Bollinger Band, my calls become worth less and I can buy them back at a cheaper price and make money. What the heck am I talking about? This is way too confusing. Well, let me break it down for you right now and show you exactly how I did it. Because I have a trade on that I put on and I'm going to show you exactly what I did in the thought process behind it. So I see this here, and the reason I like it is if this had a ton of volume behind it, like look at this volume. This is terrible. This is terrible volume. Over here we had some good volume, right? And look what happened. It continued to continue to continue because there were 3 days of solid volume. Now, obviously the average volume is kind of all the way down here, but this is terrible volume for a big green bar move like this. Couple that with the fact that Benzinga is saying whales have taken a bearish stance. So they've taken a bearish stance on Amgen. Now, I'm not going to sit here and be like, oh, 100% then there's a bearish stance on there. But that kind of goes more towards what I'm thinking here, where somebody with a lot more money than me has taken a bearish stance on Amgen. So they might be doing some moves because they think that it's going to go down. And one thing that might seem counterintuitive, but when you have these companies raising price targets from 280 to 280 from 260, a lot of the times what happens is retail traders will see this and go, oh, it's at 265 and a company raised the price target to 280. Well, I'm going to get in. This is a deal. I can get in 15 and I can make 15 bucks here. Now, I wish it was that easy. Throw me a like if you think that if you wish that it was that easy. Because, yeah, I just sit here all day and go, oh, this company raised the price target to that. There's a $15 gap. I'm just going to buy the thing and make 15 bucks. Man, that would be amazing. But that's not usually how it happens. A lot of the times, in my cynical mind, I feel like they're pulling that out to say, hey, retail traders, come in here. Look, there's some stuff going on. And then the insider is having the retail traders come in and go, oh, wow, I can make the 15 bucks. And then they sell. The insider is selling you all these shares right now as you're buying. So as the retail traders are buying it, they're selling to you. Because of these three factors, I want to take advantage of selling calls. So how do I actually do that? I come over here and I look at the call side. So calls are always going to be on the left and puts are going to be on the right when you're looking at your options chain. Now, in this particular scenario, I decided to sell something that's a little bit closer to like basically on the money because I wanted a higher credit on it. But you could also look at something like a 30 delta, which means that there's a 30% chance that the price of the stock will actually get to 280. Well, inversely, what does that mean? There's a 70% chance that it won't get there. So you could sell up here, and I'll show you that in the Analyze tab. But on this particular trade, I wanted to get something closer to the money to get a higher credit because I believe that we're going to have 1 or 2 days of this push on this very low volume, and then it's going to tank from there. So I'd rather just get a higher credit, something that's closer, and then I can make a little bit more money on that. So I come to something that's in the money, right on the 270. I right click, I go to sell, and I just go to vertical. This is automatically going to set you up with a vertical spread. A vertical spread is selling one option, the 270, and then buying another option. I usually like to go 5 wide because you get a little bit more of a credit, and it's not too risky of doing like 10 wide or something like that where you're going to have to bring over a lot of capital. So 5 wide for me is usually really good, and 5 wide just means I'm selling the 270 and I'm buying the 275. Now, the reason I actually get a credit from this is because look, if I sell the 270 at $7.27 and I buy the 275 at 460, if I'm selling you something for $700 and then I'm buying something back for $450, I actually have a profit there, right? Because I just sold something and made a bunch of money and then I buy something back. So because I actually have a profit there, I actually get a credit. So on this particular trade, I would get a credit of $2.67. So how do we analyze that further? We right click on here and we go to Analyze Trade. This is going to take you to the Analyze Trade tab, and you're going to be able to look at what you just set up. Now, I personally like to do 3 contracts because that usually fits within my risk parameter on this particular portfolio. So I'm just going to do 3 contracts. I'm selling the 270 and the 275 about a month out, 30 days out, right? And that's usually going to be really great for theta decay. 30 to 45 days out is great for theta decay. So what this whole fancy thing is showing me, the blue line is showing me at expiration profit and loss. So October 20th, I have the potential, if the stock is underneath this price here, you can see it go down, I will make $810. So I'd make $810 if it was under essentially 270. I can get all the way till 272.66 and I'll still be making some money. You can see the profit fluctuate over here as I move it. Depending on where the price is, I'll actually still make some money and I'll start to lose some money under here, okay? Now, I don't want that to happen, so I'm gonna be mindful of my trade. The purple line is showing you real-time profit and loss. So if it got all the way out to 275, I could lose $138, $140. So what I like to do is, in this particular account, I'm safe to lose about $150, $200. That's what feels comfortable to me. Let's just say $200 I could lose, right? So if I'm looking at this and it gets to 275 and I could lose, like $138 here, that's a really safe bet for me. I come back over to the chart and I just draw a line on 275. And I kind of see, okay, how far over is that? Where is there a point of resistance, right? So we see here there was definitely a point of resistance where it started to fall right below 275 and then one just above. But I think we can agree in general, because of the psychological effect of 275 being a number that most people would think of, 275 is probably going to be a good area where we might see it turn down anyway. Also that I was showing you before, look at this, right? I have a 74% chance that it will stay below $280. Now, if I go to that $200 range, I get to 278.66 I can get to. So I've given myself a lot more room, right? I can actually get all the way up here and not get out of the trade. So what's great with analyzing the selling options is the mix and match that you can do. How much credit do I want on this trade? How much time do I want to actually be in this trade? What are the probabilities I'd like to have that I feel comfortable with? Maybe you want to have a really high probability on a trade and make a little less, but you feel comfortable with that because the probabilities are on your side. Maybe if you feel confident about the type of chart that you're looking at, you want to take a little bit more credit and make a little more that way. So there's a lot of different variables that you can have when you're selling options that can be really great for you. But right here, and I thought, okay, it's going to crash. I need it to crash like really quickly. Whereas me selling the option, it can still go up against me here, it can go sideways, it can slowly trickle down, and it can crash, and those are all ways I'm gonna win when I'm selling the option. If you don't mind, like and subscribe if you found some value in this and you like these types of videos. I'll make more. I appreciate you sticking around this long, and I'll catch you on the next one.